check multiple choice questions and MCQs. Answers 2023, multiple question audit for B.com, CA, CS, CMA exams. To follow the second part of the episode and the remaining questions, please subscribe to the channel, like the video, and add a comment to support us. Let's start. 1. Auditing refers to A. Preparation and checking of account. B. Examination of accounts of business units only. C. Examination of accounts of professional accountants. D. Checking of vouchers. C. Examination of accounts of professional accountants. 2. Main object of auditing is A. Detection of errors. B. To find out whether P&L-AC and B/S show true and fair state affairs. C. Detection of frauds. D. Detection and prevention of frauds and errors. B. To find out whether P&L-AC and B/S show true and fair state affairs. 3. Auditing is luxury for A. Joint stock company. B. Partnership firm. C. Small shopkeeper. D. Government company. C. Small shopkeeper. 4. Auditing is compulsory for A. Small-scale business enterprises. B. All partnership firms. C. All joint stock companies. D. All proprietary concerns. C. All joint stock companies. 5. Propriety audit refers to A. Verification of accounts. B. Examination accounts of propriety concerns. C. Inquiry against justification and necessity of expresses. D. Audit of government, companies. C. Inquiry against justification and necessity of expresses. 6. Propriety is normally undertaken in case of A. Joint stock company. B. Government company. C. Statutory corporation. D. Government departments. D. Government departments. 7. Interim audit refers to 2015-2018. A. Examination of accounts continuously. B. Examination of accounts intermittently. C. Audit work to find out and check interim profits of a company. D. Carrying on audit for bonus purposes at the end of the year. C. Audit work to find out and check interim profits of a company. 8. Final audit implies A. Audit of accounts at the end of the year. B. Finally checking of accounts to reveal frauds. C. Audit for submitting report immediately at the end of the year. D. Audit of banking companies. A. Audit of accounts at the end of the year. 9. A continuous audit is specially needed for A. Any trading concern. B. Smaller concerns. C. Banking companies. D. Any manufacturing companies. C. Banking companies. 10. Joint audit implies A. Audit of two concerns together. B. Audit of joint stock companies. C. Audit of IANT sector companies. D. Audit by two firms of CA. D. Audit by two firms of CA. 11. Management audit means A. Audit undertaken on behalf of the management. B. Evaluating performance of various management processes and functions. C. Audit undertaken on behalf of government, to punish management. D. Compulsory audit. B. Evaluating performance of various management processes and functions. 12. Systems audit implies A. Systematic examination of accounts. B. Audit undertaken to improve auditing systems. C. Inquiring accounting and control systems. D. Checking the performance of management. C. Inquiring accounting and control systems. 13. Internal audit means A. Audit undertaken to ascertain truth and fairness of state of affairs. B. Audit undertaken internally to evaluate management functions. C. Audit undertaken by employees of the organization to check financial irregularities. D. Audit by independent auditor to improve internal affairs. C. Audit undertaken by employees of the organization to check financial irregularities. 14. Internal audit is A. Compulsory for a company with paid-up capital of 25 rupees lakh and above. B. Voluntary for a company. C. Not necessary for a company. D. Necessary for a company. B. Voluntary for a company. 15. Detection of errors and fraud in audit is A. Primary object. B. Secondary object. C. Specific object. D. None of the above. B. Secondary object. 16. Internal auditor is appointed and removed by the A. Management, B. Shareholders, C. Government, D. C&AG. ANS, A. Management. 17. The object of internal check is to A. Control wastage of resources, B. Prevent errors and frauds, C. Verify the cash receipts and payments, D. Facilitate quick decision by the management. ANS, B. Prevent errors and frauds. 18. Effective internal check system reduces A. The liability of auditor, B. Work of auditor, C. Both work as well as auditor, D. Responsibilities of an auditor. ANS, B. Work of auditor. 19. Internal check is a part of A. Internal audit, B. Internal accounting, C. External audit, D. Internal control. ANS, D. Internal control. 20. The objective of internal audit is A. To prevent error and fraud, B. To detect error and fraud, C. To improve financial control, D. All of the above. ANS, D. All of the above. 21. Internal check is carried on by A. Special staff, B. Internal auditor, C. Accountant, D. The members of the staff among themselves. ANS, D. The members of the staff among themselves. 22. Internal check is suitable for A. Larger concerns, B. Smaller concerns, C. Petty shopkeepers, D. None of the above. ANS, A. Larger concerns. 23. Internal check is essential for A. Petty traders, B. Cash transactions in a large concern, C. A concern using automatic equipment, D. None of the above. ANS, B. Cash transactions in a large concern. 24. Misappropriation of goods may be checked by A. Proper supervision over stock, B. Checking of employees, C. Punishment of employees, D. None of the above. ANS, A. Proper supervision over stock. 25. Window dressing implies A. Curtailment of expenses, B. Checking wastages, C. Undervaluation of assets, D. Overvaluation of assets. ANS, D. Overvaluation of assets. 26. Falsification of accounts is undertaken by A. Auditors, B. Clerks, C. Accountants, D. Responsible officials. ANS, D. Responsible officials. 27. Errors of omission are A. Technical errors, B. Error of principle, C. Compensating errors, D. None of the above. ANS, A. Technical errors. 28. Test checking refers to A. Testing of accounting records, B. Testing of honesty of employees, C. Intensive checking of a selected number of transactions, D. Checking of all transactions recorded. ANS, C. Intensive checking of a selected number of transactions. 29. Test checking should not be applied to A. Sales book, B. Purchase book, C. Bank reconciliation statement, D. Bills book. ANS, C. Bank reconciliation statement. 30. Test checking should not be applied to A. Purchase book, B. Sales book, C. Stock book, D. Cash book. ANS, D. Cash book. 31. Vouching implies A. Inspection of receipts, B. Examination of vouchers to check authenticity of records, C. Surprise checking of accounting records, D. Examining the various assets. ANS, B. Examination of vouchers to check authenticity of records. 32. A person qualified for appointment as a company auditor is A. A graduate, B. A body corporate, C. Officer or employee of company, D. None of them. ANS, D. None of them. 33. Contingent liability is A. Trade liability, B. Possible liability, C. Outstanding liability, D. None of the above. ANS, D. None of the above. 34. Undervaluation of stock is A. Technical error, B. Compensatory error, C. Error of principles, D. None of the above. ANS, C. Error of principles. 35. Huge investment in advertisement shown in financial statements as A. Revenue expenses, B. Capital expenses, C. Deferred revenue expenses. D. None of the above. ANS, C. Deferred revenue expenses. 36. Provisions regarding redemption of preference shares are in Companies Act, 2013 under A. Section 180. B. Section 56. C. Section 55. D. None of the above. ANS, D. None of the above. 37. Verification refers to A. Examination of journal and ledger. B. Examination of vouchers related to assets. C. Examining the physical existence and valuation of assets. D. Calculation of value of assets. ANS, C. Examining the physical existence and valuation of assets. 38. Object of verification of assets. A. Physical verification of assets. B. Checking value of assets. C. Examining the authority of their acquisition. D. All of the above. ANS, D. All of the above. 39. Which of the following statements is correct? A. Valuation is a part of verification. B. Verification is a part of valuation. C. Valuation has nothing to do with verification. D. Auditor is a valuer. ANS, A. Valuation is a part of verification. 40. Stock should be valued at A. Cost. B. Market price. C. Cost price or market price, whichever is lower. D. Cost less depreciation. ANS, C. Cost price or market price, whichever is lower. 41. Valuation of fixed assets is based on the concept A. Going concern. B. Conservation. C. Money measurement. D. Dual aspect. ANS, A. Going concern. 42. Valuation means A. Calculating value of assets. B. Checking the value of assets. C. Checking the physical existence of assets. D. Examining the authenticity of assets. ANS, B. Checking the value of assets. 43. Auditor is not valuer was stated in A. Kingston Cotton Mills case. B. London and General Bank case. C. Lee v. Newchattle Company Ltd case. D. London Oil Storage Company case. ANS, A. Kingston Cotton Mills case. 44. Fixed assets are valued at A. Cost. B. Market price. C. Cost price or market price, whichever is less. D. Cost less depreciation. ANS, D. Cost less depreciation. 45. Floating assets are valued at A. Cost. B. Market price. C. Cost price or market price, whichever is less. D. Cost less depreciation. ANS, C. Cost price or market price, whichever is less. 46. The scope of work of internal audit is decided by the A. Shareholders. B. Management. C. To improve financial control. D. All of the above. ANS, B. Management. 47. Outstanding expenses should be verified with the help of A. Cash book. B. Balance book. C. Journal proper. D. None of the above. ANS, C. Journal proper. 48. Book debts should be verified with the help of A. Balance sheet. B. Amount received from debtors. C. Debtors schedule. D. Certificate from the management. ANS, C. Debtors schedule. 49. Investments in hand should be verified with the help of A. Schedule of investments. B. Balance sheet. C. Inspection of securities. D. Certificate from the bank. ANS, C. Inspection of securities. 49. Investments in hand should be verified with the help of A. Schedule of investments. B. Balance sheet. C. Inspection of securities. D. Certificate from the bank. ANS, C. Inspection of securities. 50. First auditor of a company is appointed by the A. Shareholders. B. Central government. C. Company Law Board. D. Board of Directors. ANS, D. Board of Directors. 51. Which of the following persons is qualified to be a company auditor? A. An employee of the company. B. A body corporate. C. A person who is indebted to the company for an amount exceeding 1,000 rupees. D. A practicing chartered accountant. ANS, D. A practicing chartered accountant. 52. The first auditor of a company will hold office A. For a period of 1 year. B. Till holding of statutory meeting. C. Till the conclusion of first annual general meeting. D. Till a new auditor is appointed. C. Till the conclusion of first annual general meeting. 53. Normally, a company auditor is appointed by the A. Central government. B. Shareholders. C. Board of Directors. D. Company Law Board. B. Shareholders. 54. An auditor in a casual vacancy is appointed by the A. Board of Directors. B. Shareholders. C. Central Government. D. Company Law Board. A. Board of Directors. 55. If an auditor is not appointed at annual general meeting, he is appointed by the A. The Central Government. B. Board of Directors. C. Shareholders. D. The existing auditor shall continue to be auditor of the company. D. The existing auditor shall continue to be auditor of the company. To follow the second part of the episode and the remaining questions, please subscribe to the channel, like the video, and add a comment to support us.